Okay. Excuse me. All right. So market gap up this morning. So did investors. See what they talking about. Stock futures mixed ahead of Brexit. Is that so soon? Netflix spikes on price hike reports. Of course Netflix spikes. Why wouldn't Netflix spike? Right, raising prices 13 to 18%. People, that's actually not that much. What are they like? It's probably like $2. It's the benefit to having everybody in the world subscribe to your service, basically. $352. So they're out of the channel at the open this morning. So that's interesting. 350. They're so close to being out of the channel. It's okay. No, they're out of it. Yeah, there's the line at 350. So they're going to open out of the channel. What's up, Mel? What's up, Blair? How you guys doing? Dow traded lower. JPM dropped on weak results. Okay, so we talked about earnings yesterday. Weak results by JP Morgan right there, bringing it down to the 98 level. Not that low, as a matter of fact. 98.51, just above, or what's the low from yesterday? The low's 98.66, so just below. I guess I could have looked here. Just below the low of yesterday so far. Again, this is our first earnings. Tilray. Tilray, Nubev, and ACB rallying after Tilray signed a revenue sharing deal, and Aurora continued to gain on acquisition news. ACB. I haven't heard of ACB. They're new to me. I'll do ACB. NBev. I think I've heard of NBev, but we don't really follow them. Oh, that's a nice looking chart on NBev. Look at that on the weekly. And now we have this kind of formation on the daily. Looks like it just popped out yesterday. And it's up a little bit today. It's above the high of yesterday. So if it opens here, which we got about a minute or 15 seconds left. By the time you hear this, the market will be open. Lori, good morning. I do want to say also the NASDAQ has a little bull flag here, a little mini bull flag over the past couple of sessions. This is today on the overnight session because this is the futures. So, all right, we're opening. Here we go. What do we got down here? We got team down again. Nice. So more red. Again, with earnings coming up on the 17th. VMW down again. Lilly, THRM, AMRN down. What's up here? Ooh, look at this. Some green. Twitter, Square, Tesla, AMED, INSG again. And this thing just rocking. Remember the other day when we caught that right at that breakout point? Very nice, very nice. INS also not stopping. I think people are confused about these two stocks. They both look really good. They're both running. So I think people are just like, oh, you heard about INSG? And then they don't type in the G and then they just buy it. Could happen. SYS, SSYS. Oh, wow. That's no bueno. Yeah, Netflix up 5% today. This thing has not pulled back. Looks like it paused here for one day here, which was yesterday, and selling off, which seems rational after breaking a trend line like that, after just A to B move all the way through the trend line. No, I mean, there wasn't even a pause here. I think this was higher than that day. This was every day had a higher high. Maybe, yeah, maybe this day wasn't higher. 269.75. Yeah, this wasn't higher by 60 cents in a $300 stock. So one pausing day, that's it through the whole move here. Very hard to jump on that. Very, very difficult from my perspective. You know, you probably could have jumped on there or maybe there after overtaking one of those highs. But other than that, Hard to get on that guy. A nice little basing somewhere would do the body good. Twitter up 1% after little consolidation. It's been consolidating here pretty nicely. So low volume down days after a pretty big volume up day. Not quite a doji candle. It's closing up above the middle of the range. So Twitter looking okay. Not really breaking out yet, but looking pretty good. You got the 10-period moving average. I think this is the 50, and then this is the 200. So here is a little pause to possibly buy off of, which would get you back up to this range of 36, which was its prior head and shoulders, inverted head and shoulders breakout point. It tried for a minute, but the bear pushed it down. So did that Citron report, if you guys remember that. Netflix back up there. Edward Life Sciences. Roku. There's Roku, if I could catch it. Didn't catch it. Okay, let me just type it in. Oh, NASDAQ spiking up. So there's Roku. We talked a little bit about Roku in a consolidation pattern here. I actually have not had a chance to... Let me look into this now. Hold on a minute. Qualcomm, sorry about that. I missed that one. Let's take a look at NASDAQ real quick too. Okay, so let's look at Qualcomm. Was it QCOM? Yeah, QCOM. So Qualcomm on the weekly here has been very choppy, all over the place. On the daily here, we're down here in kind of a bear flag scenario, but I wouldn't consider it really probably wouldn't really consider it a bear flag. But you do have two conflicting trend lines here, right there, and then there's probably one right there. Whoops, my trend line walked. Yeah, I would probably consider it if it broke above the trend line and volume was healthy. They do have earnings coming up about 2 or 3 weeks from now. So you could probably get a trade in before then. Qualcomm is... One of the problems with Qualcomm is the fact it's been so choppy over the past year or two. You could get another leg higher, which, I mean, I think is probably the play there. But even that's only 20%. There's not a lot of... This doesn't have anything new in the pipeline that's really like, oh yeah, I got to buy Qualcomm. I don't think there's any... I'd have to look at the fundamentals on IBD, but I don't think there's any fundamental reason to buy Qualcomm, to be honest with you. So let's actually look at those fundamentals real quick. Man, NASDAQ going for it here, guys. Look at that. Composite rating on Qualcomm 63. Relative strength is 59, so it's in the middle of the pack in terms of composite rating and its relative strength. It's 16 in this industry group. It's not ranked number 1 or number 2. So it's a very average stock. And right there, getting to my trend line that I drew. So let's see, negative 2% last quarter EPS change, negative 6% 3-year growth rate. Not a lot of good in Qualcomm. 1,600 debt to equity ratio. Pre-tax margin 24% is good. Market capitalization 70 billion. Accumulation distribution is a D plus, which they have as a plus, which is weird. Yeah, I don't see any reason to buy Qualcomm. Man, the inability of the market to go down the past 1, 2, 3, 4 days is fairly astounding. We've held very tight up here. Unfortunately, it's been... Well, actually, wow, look at the volume on these prior 2 days. I really didn't notice that yesterday, that this was low. And this is kind of a mirror of that day. So they're testing the... I kind of view these as kind of test days. And so far, it's passing the test. We've already breached these 2 days' highs, which is a definite change in behavior. Before, we were easily breaking lows of days. Now we're easily breaking highs. So more bullishness for the market. It'll probably take a little more for the market to fully be back in bull mode in terms of news and fundamental backdrop. But the selling has abated. You see the drop off in volume here ever since I don't know. I guess right about there, right about when we had that news out of China. We had the Apple news, and the next day was the news out of China in the mind-blowing job report. Ever since then, the market behavior has shifted back into more healthy behavior. If you removed all this from the fray, what would you think about that right there? You would think that's pretty normal market behavior. You'd think this was like a Tuesday, right? So I think that's pretty good so far. We had a nice little. Oh, that was way back at the top. The nice little run. I was going to say, all this looks choppy because it was, but maybe we're back to normal. I had a couple days here of normalcy, and we talked about that. And then right back into wide action. So we don't have wide action yet. We're still stuck in nice tight action. So that's good. If we get one nice up thrust day and that maintains, that would put us above the 50-day moving average, and that would be very good. Would be very good. What's up here now? STNE. I think I just clicked on that, which is why that's highlighted. Twitter, Baidu, Docu. So DocuSign, we've been not really poking at it, but it's been on our list for a while. It looks like it's been stuck in a lower range down here, and it looks like it's trying to break out of that range. Had a big update the other day, right there, and resting here. So test no sellers. Look at yesterday, close at the highs. So Docu could be ready to start its retracement. This is a recent IPO, if I'm not mistaken. Yeah, this is all the trading history. So we're back down to the IPO price, which it rocketed out of. And so we could be a possibility for a quick move back up here, maybe 4 or 5 months, which is pretty quick for a 50% move in anything. So Docu not looking too bad. I'm gonna go back to Roku for a second, so I'm really interested in this trade. Let me look at those fundamentals on Roku. Excuse me. Oh, and the Nasdaq's out of my screen now. Up 1.25%. So very good behavior here in the Nasdaq as it's trying to get higher. Oh, look at that. The volume on this candle is bigger than the opening candle. That's usually not the case. Usually not the case. So that's great. That's a great open to the day. Did we overtake yesterday or a couple days ago high? 63.32. Is that the high? 66.32, excuse me. Not quite. Looks like we're not quite there. 66.30.5. So we're not quite overtaking that high. Doing okay, though. Roku actually has very bad numbers. 32 composite rating and 28 relative strength. Maybe I shouldn't be as interested in Roku as I am in this chart. Rank number 9 in developed streaming entertainment devices. 81% EPS change last quarter, which is good. 50% negative EPS current quarter estimate. So maybe I'll shy away from that one. All right, what was the other one? We're looking at Docu. Let's see what Docu looks like. '83 composite rating. (133% EPS change last quarter. That's nice. 37% sales change. 42% 3-year sales growth rate. Negative margin? Really? It doesn't look so good either. Okay. EW. Look at EW. Still hanging on strong. We were trading this one back 2012, 2013. It had a big long cup for a while. Came right back. Edward Life Sciences, composite rating of 98, so outperforming 98% of the stocks in the market. Relative strength of 91, so it's outperforming 91% of the stocks from a technical perspective. And that's good. EPS of 27% last quarter. Accumulation distribution rating is an E. Up-down volume is 1.2, however. Very interesting. And INSG up 2.3, doing pretty good. Looking for something to break out, something near highs. Netflix is a potential candidate if it'll calm down for a couple weeks. New NEWR, this is a mining company if I'm not mistaken. Oh, this is New Relic. No, I am mistaken. This is not what I thought it was. Software, develop software that enables enterprises to collect, store, and analyze amounts of data in real time. Oh, that's pretty good. Nice little downtrend through the last half of this year. Looks like it's breaking a trend line today. Volume isn't substantial, but we've been quieting down. We have earnings coming up. Looks like in a couple of weeks, 3 weeks, and we're still pretty green here on the Nasdaq. Looking good, man. 433% EPS change last quarter. 140% change current quarter estimate. 66% last quarter earnings surprise, which is always nice to see. 4 quarters of EPS acceleration, but you have an EPS rating of 72. What's that about? Maybe it wasn't profitable 3 quarters ago. That's funny. EPS, yeah, I think it probably was not positive in terms of EPS 2 or 3 quarters ago. No, it was positive, negative about 4 quarters ago, 5 quarters ago. Interesting. EPS estimate for current year is 4,900%. So that's the year. That's why. Okay. Sales 36% with a 41% growth rate. Pre-tax margin is 0.3%. ROE is 0. That's weird. Very weird. No percent change in funds owning stock. No quarters of increasing fund ownership. That is either about to change or bellwether for bad action. We don't see a lot of accumulation down here. I will say that on the daily chart, we just see declining general volumes. No major green pops in here, which does point to lack of institutional interest. Okay, so newer is a maybe. AVGO. Oh, looks like an alert that I put on here a while back. Looks like it's about to be tested. Let's look up AVGO. Hi, James. Good morning. 98% or 98 composite rating, which is good. I'm just going to breeze through this. 89 relative strength. So you're talking basically 98 and 89, which is really good for really good for AVGO. Also, no quarters increasing of funds owning stock. Of course, the last quarter we've been in a bear market, so that would kind of stand to reason. At the same time, we do have a little bit of green popping through here, which is nice. There we go. Bye, babe. Hi, James. Ethan, give me a hug. So we've got, that's a sell day, buy day, buy day. A little elevated on the sells. But AVGO today looks like crossing this trend line pretty nicely. Have to see how it closes. This has a history of closing lower, so probably will wait till the close if I were to be buying that one. But above all its moving averages on the daily chart, there's your 50-day crossing the 200-day right there. So that is a bullish indication, which not a lot of stocks have right now. No, it didn't quit. I muted it and was saying goodbye to my son. He's going to school. NASDAQ continuing a little bit there. It looks like it's still pausing. All right, Twitter, INS, INSG, looking good right there, 2.3%. VIPS, CLR, ANET. I need to have another watch list. I got too many stocks on my watch list. ABMD. Chug. Ooh, look at you, Chug. CHGG, let's look at you. Chag, not Chug. You'd think I was a drunk. So composite ranking of 98, number 1 in its industry group, which offers print textbooks, e-textbooks, supplemental materials to college students via its hub platform. 600% EPS change, 255% last 3 quarters EPS change. Last quarter earnings surprise was good. 3-year EPS growth rate of 145%. And look at this thing, man, outperforming 50 crossing the other day. Right there, it looks like, somewhere between these 2 days. The 50 crossed over the 200 day. The 10's been above for a long time. So this is definitely showing leadership, but we don't hear a lot about this stock. It hasn't been on my leaders list at all. Well, I mean, it's here, but we haven't really seen it. And I poke around this list quite often, so it's been pretty muted as of late, which is probably a bullish sign. And if you look at the cup with handle, this actually right here I think would be your breakout point. Right there. So could be, yeah, low volume consolidation, high volume on the move up. I'm not mad at this one. Let's look at the rest of the numbers here. We have pre-tax margin of 13%, which is a bit low. Sales is 19%, so sales is a bit low, but EPS is doing really good. Market cap's only 3.7 billion. Up, down. The volume is 1.5. Okay, so here's an IBD article. After 291% run, Chegg has relative strength line a new high. This is on 12/19. This was a month ago. We all know what happened a month ago. But number 1 ranked online educating stock, along with other leaders like TAL and BFAM, which I haven't heard about that one. So resets base count after a 291% climb. That was this base undercutting this low here. So it reset the base count. And so, I mean, I think it's looking pretty good. It's, if you consider this the breakout, we're about 7% above the breakout point, which is technically too elevated to buy. But I will say, just coming out of this bear market, I don't think it's probably necessarily a bad thing. You can have another buy point over this all-time high here, and that could potentially get you interested. This is a pretty small market cap stock. What was it, 2.5 billion? I'm headed back to that screen. 3.7 billion. So it could have some more to go. 1.3 million average volume, which is good. Pre-tax margin. Yeah, the margin's a little bit thin. If there's, I mean, it does software, so you would think, oh no, offers print textbooks. Maybe that's why. Print and e-textbooks. So this is one to keep an eye on. CHGG. All right, mark that one. I like that one. Okay, so what else can we find here? NIO, which is NIO is a recent IPO we put on here. I don't remember why. Hi, James. Yesterday with a very good volume day. Let's look at NIO on the screener here. See what we get. 34 composite rating doesn't instill a bunch of confidence, does it? 34 composite rating. Chinese sells electric vehicle parts as well as provides battery charging services. It's in the same industry group. At least IBD has it in the same industry group as General Motors, Toyota, Ferrari, Tesla, which are 1, 2, 3, 4 in the industry group. This has not good numbers, but 26% change in funds owning stock. I wonder if they're just buying stuff in the sector. They'll tend to do that sometimes when a sector is hot. If something says, I mean, in NIO's let me go back. Its market cap is pretty low. 1.6 billion. So they could take a position in this for peanuts for them, and just to have exposure to the sector. Let's see, there's an article here that mentions Tesla, but they have this company apparently in there. Okay, Chinese car maker NIO looks to build on the success of the ES8 with its upcoming ES6, a smaller and cheaper electric SUV. Well, I guess they are a car maker, but they don't even show a picture of it in the article. Interesting. Anyway, keep an eye on this one. Looks like it has a pretty decently clear resistance point here at about the $8 level. It's pretty high. Looks like if you gently slope that like you should here, that could maybe get you interested. But nice volume accumulation on the right side of this chart so far. But reading the article, looking at the numbers, it's hard to get super interested in that. But if those numbers change quickly, say they sign a big deal or something, that could be advantageous. Paycom, here we go. Here's Paycom. Recent leader back above moving averages, and they're all really tight here, which shows. So here's your 10, 50, and 200. So here's your 50-day right there, and we're above all of those right now. Looks like we're trying to overtake. If we can overtake these highs here, I think that would be a pretty clear buy signal on Paycom. Let's look at Paycom's numbers. Last time I checked, they had really good numbers, if I'm remembering correctly. 99 composite rating, outperforming 99% of the stocks in the stock market. That's all of them, mind you. That's all of them. You don't get to 100 in the IBD rankings. You can't outperform 100% of the stocks. And relative strength is 92, so definitely healthy on relative strength. Definitely a market leader. ROE of 76%, 3-year sales growth rate of 36%, EPS of 33%. Last 3 quarters average EPS growth is 52. So they're decelerating a little bit in terms of the EPS, but yeah, I'm not mad right now at Paycom whatsoever. Looks like it just came back and retested that prior base, couple whipsaws below, and maybe we'll get back above. Down about 35%, which is phenomenal considering that the market went down 25%. So we talked the other day about 37.5% for stock going down in line with the market. That's exactly what Paycom just did at 35%. So potential breakout here coming maybe sooner rather than later. It could just take one day and you'll want to be in this stock more than likely. I don't have Paycom highlighted here. Let me highlight Paycom. So if we're turning around here, guys, Paycom's one definitely to keep an eye on. Very good fundamentals, very good technicals, and all-time high of 164. Yeah, darn it, looking a little cheap there. Oh, that's for August. That's not bad. I'm not mad at August for that. Hi, James. You laying on me, kiddo? Okay, so looking at Paycom myself for a trade right now. Lining it up. Gonna save a favorite trade. I'm gonna get rid of all of these. I got too many on my watch list. Okay, so I'm going to make a new watch list here, and I'm going to add Paycom. And I'm going to add, okay, now I got Paycom on the watch list. All right, so Alibaba, also in a very long downtrend, looked like for about 6 or 7 months now. Been based out here for all. Has earnings coming up on the 30th. Actually, JP Morgan, we talked about earnings. JP Morgan had earnings. Let's see how that's reacting. Pretty good. They said disappointing numbers. Oh, yeah, estimate was 2.2. Actuals is 1.98, so about 10% lower. That's a pretty big miss, and it's not reacting like the world just ended. So that is a positive sign for the market. That's a positive sign for the market. So Alibaba looking pretty decent here. Coming down a little bit to this prior high from a couple of years ago. Other than that, it's kind of floating in its own little zone. Volume declining as we get lower here. No one's interested in selling this thing anymore. Could be a possibility it rockets higher. I don't know, but are you hungry, James? Mm-hmm. You're hungry? Do you want waffles? Hmm? No. So Melicabra with a very large, I've got it in this pennant pattern here. I'm not sure if it's quite ready to break out of that. FTNT, here's one we should look at. This is what I love about the stock market. Just the hunt. Just the hunt. Look at this beautiful behavior. Above its moving averages right now, you got the 50, not quite above the 200, but we talk about tight action. There's some tight action right there in FTNT. This is always good. Composite rating 98, so outperforming 98. Develops unified threat management system to provide security and networking functions. Tell me that's not good. So nice pullback, which it's had a nice pullback. This one took a couple years to get back to all-time highs. Not sure exactly why the reasoning for that, but 75% EPS change last quarter. That's big. 75%. You want mac and cheese for breakfast? You are just silly. You are silly. This kid is silly. 49% 3-year EPS growth rate, which is excellent. 21% sales change, which is good. 18% pre-tax margin. ROE of 25, which is good. 12 billion, which is not bad. And 94% relative strength rating, just above its 50-day moving average. So this one not bad at all. Look how nice and flat it's been. It had this big down day in the middle of November, and it hasn't really. That's a little loud for the mic, Bugs. We can't make mac and cheese for breakfast. Why? Because it's cheese. We can't eat. Oh, cheese for breakfast just seems wrong. You're gonna be 300 pounds before you're 6. But yeah, see, I like how flat this is right here. Looking pretty good. You can see it doesn't have to rally. Last time it came down a significant amount. It didn't really rally right back. It took, in fact, a couple of years. And look at the NASDAQ, man. This thing is just strong today. Look at that. Boom, boom. Let's try not to rally it too hard as we accumulate our positions. Let's try not to rally it. I'm not sure it's doing such a great job. Yeah, I think we're up from here, guys. The way this is behaving, the way a lot of these charts are looking, not breaking down, not selling off. Yeah, we're gone. So what's the high of this day? 66.41. We're even above that. So a failed breakout to the downside of this trend line. And we're into highs right here from this little local area, 66.45. Yeah, we're about 10 points, 15 points into highs. So that's really good. About 1.8%. We could have a second follow-through day today. And the way it's looking like we will have a second follow-through day today. If this keeps up throughout the day, this is looking excellent. This looks very, very good. For FTNT also rocking right there. So starting to get a little bit elevated. Security software always hot. in terms of its pullback, you got about 32% pullback, which is very manageable. And look at the volume on the daily. You got one day of high volume here out of the blue. And then after that, it's pretty muted. You got a highish volume day there. A big up there. So that's a nice bottoming day right there. Bottoming day, or a expansion. Yeah, volume could be a little bit better in FTNT. It's not great, but maybe it doesn't have to be. Maybe they just never sold it. And the ones that did sell it, someone else bought it. So they're just waiting patiently for those shares to come in. So 2.6 on earnings, so 3 weeks from now. And yeah, this could easily get back to highs. So like we said, this was down about 30-ish%, 32%, which is textbook for a cup with handle. This one here came down 54%, which could be why. See, it rallied 63% out of the lows. You know, pretty much in a not quite a straight line, but you know what I'm saying. It's a weekly chart. Took it from, looks like February until that first peak there took about 6 months. About 6 months for that to happen. So if you're looking for 6 months to get back to highs, I think that would be normal. Let's do. That shouldn't be 60%. Yeah, it's 40%. So that's not too bad. 20% would even put you at 78, which isn't too far away. Yeah, we could go back to highs pretty quick in this as long as the numbers are good. One earnings report. So nothing too crazy there. I did Qualcomm already, Mel. Did you hear me? Qualcomm, it was in a little symmetrical triangle. And fundamentally, shoot, my good mouse just died. That's what I get for not charging it. Fundamentally, Qualcomm doesn't have any major impetus behind it. Doesn't mean it won't rally, but it's not something that I would particularly favor. Where's my... Oh. There we go. My good mouse died. I've got to go plug it in. I think on that bombshell news, ladies and gentlemen, I'm going to get out of here. Yeah, I'm getting out of here. So I'll see you guys back tomorrow. And anyway, but yeah, Qualcomm, fundamentally the numbers don't look great. Relative strength numbers don't look great. The pattern here with the little symmetrical triangle could be good, but I'm not really super enthused about it. I'd much rather get in an index fund here than I would get in Qualcomm. Just kind of let you know that. So, all right, guys, I'm going to get out of here again. See you tomorrow. Have a good day.